Good morning, everyone, and thank you guys for being here. I'm very excited to talk about Banking 3.0. It actually glues everything that we've been working for the past 2 years. For those that only believe that we were doing cards, we'll now see what else can you do with the instrument that we're basically putting out there. So we're in a mission to build a borderless banking platform, creating interoperability and composability between TradeFi and Web3, making global banking cheaper, faster, and simpler. So I've been in payments for more than a decade. I'm old. And what I've observed is actually fintechs, even when they're transforming payment or disrupting, they're still offering siloed, bundled solutions built on top of legacy systems. And at the same time, you have Web3 creating new ways of doing things, but of course, it's still far away from the Homer Simpsons or my dad user, which makes it very difficult to get to that billion users. So as a result, we end up having citizens still blocked or locked in the traditional bankers. So the banking evolution. In Banking 1.0, bankers realized running banking was very costly, and they kept opening branches all over the globe, representing their brand. Ultimately, bankers used technology to leverage profitability. And then we saw Banking 2.0, which was finally then technologists understanding that bankers were not doing a great job, but they could basically build a front end which was a lot better, a lot simpler, even though connected in legacy offers, making the life of users better. But then we're in the era of Banking 3.0, where ownership is given back to those that should hold it. So effectively, users regain control of their money, and they will finally start banking without those traditional bankers. So it is time to separate them one from the other, bankers from banking. What the heck do you mean? Well, everybody should have access to financial rails, and users should have a choice to use or not the bankers that they want to use, or have their own custody of their own funds, no longer having to use the mattress. Maybe I should tell that to my dad as well. So global retail banks, probably very common to all of you in this stage, but let me remind how difficult it is and why we do not have global bankers. In fact, if you actually look it out there and research, it's less than a hand of bankers that might hold a full banking license in all countries available. And why? Because financial regulations differ on a country basis. And you need lots of rules around custody of funds, rules around moving funds, and especially for clearing and settlement of those funds, interbanking clearing. Well, that leads me to the second point, which is the payment rails. You have different types of currencies and different types of systems that needs to be liquidated in order for those banks to operate locally. And then finally, you have also users, which differ. Some users are very used to instant credit. Some users are not in need of that instant credit yet, even though technology, Apple Pays and the Google Pays and the YouTubes out there are decreasing the distance between users globally. You still have different behaviors, survival need for credit and luxurious need for credit, right? So imagine that complexity to bundle that and say, I am a bank that is able to do all of that to the community level. I'm not even talking country level. Makes it quite difficult. And even when they do so, bankers, they normally choose that very profitable layer, which is the one paying the highest interest on money borrowed, and providing, of course, zero write-off to them, or nearly no lack of payment of those financial instruments, and therefore making them focusing on a very specific target, rather than doing for all. So we saw the trajectory of neobanks out there. Here's a little bit of the evolution from the past 3 years. You see Monzo basically partnering up with Wise to offer a better offer. So a neobank partnering with a money remittant partner, and then effectively getting a cheaper solution to the user. And then you have Revolut hitting 25 million users. But all in all, if you look all of these initiatives, it's nothing truly new. And on the other hand, we have our community accelerating extremely fast, making complex topics a lot more my dad proof, which is complexity around wallets and keys and assets, how they're being transacted, but again, organizing themselves in separate groups. And in one hand, you have a crypto user, very willing to do very complex things in order to close the loop for banking, payment, transfer, investment. And on the other hand, a very spoiled group, which is not willing to learn a lot more than just give me an account where I can put my money and I get return on my investment if I have one, or if I need credit, that I do so with the lowest interest rate possible. We need to basically make sure this is merged. How are we going to merge that? If we basically do banking 3.0. So neobanks are trying to develop the global accounts. Traditional banks claim that they offer global accounts. With the separation of asset management and treasury management from banking, we can actually do global accounts. So what is an account? Right? I have a money transfer coming in. It can be through a deposit, through an employer payment, and then it sits a digital balance of that money. And from that balance, you have instruments to move that money out, which is a card, which is a wire transfer, or something, or like a withdrawal of cash in an ATM. Okay, so what is the new core banking account then, given the infrastructure that we have out there? Well, now we use blockchain, which means we have assets which are no longer fiat, or let's call them digital cash, digital money. Then you have EUROEs, GBPs, thanks to Monerium, and we have USDCs and EuroCs to Circle, or XDAI, SDAI, and from Gnosis, right? Now, those are pegged against traditional currencies with zero volatility or very little volatility, whatever you choose. Okay, then you have the smart accounts. Pioneer like Safe have built the account abstraction. And then you have decentralized KYC and KYT, ensuring that every data now is migratable. By the way, this is the dream to regulators. And we keep talking about regulators. And in European Union, for instance, there's something called open banking. What's the objective of open banking? Data belongs to the user, it's portable, and if I want to have credit from different financial institutions, they should be able to access my score. But the incentive today doesn't allow you to do so, because the financial institution that is serving you will no longer have that need to, will no longer have you. So why would I share the data? So it's a very conflicting point. Okay, so let's break it in capabilities. So we have the card capability. Thanks to Visa, we have Visa Money Sent, which means it's an instrument for you to get money in. And on the money out, Visa created something called multi-currency, where users can spend multiple types of currencies like domestic transactions. If I hold US dollars, I can spend US dollars. If I hold euros, I can spend euros. If I hold Brazilian reais, I can spend Brazilian reais. Virtual cards, of course, Apple Pay, Google Pay, and you have cash withdrawal. Okay, so card capabilities are set. Account capabilities, they're also set. We have instant payments, cash in and on-ramp, which means connected with faster payments, UK, SEPA, European Union, PIX, Brazil, and given an account number, you are now with an account. And the same goes in the way out. Then you have additional capabilities, which is paying bills and local direct debits. And then you have, finally, a Web3 capabilities, which is very familiar to this room. You can basically go from on-chain, bridge, swap your tokens, transfer funds, and then off-chain them in a similar manner. So, yes, it is set. It's ready, it's live, and I have been living on-chain for the past 3 months, paying my bills just by basically doing exactly the way I used to do with Barclays. So I get money directly from an IBAN issued by Monerium. That money becomes EUROE. That EUROE sits in my account, and then I go and I spend those EUROEs at the point of sale. Oh, but Marcos, there are taxes and blah, blah, blah. Guys, money coming from IBAN, from an employer, it's already deducted taxes. So it's effectively an account. But what other capabilities can you use? I actually pay this garage rental with IBAN transfer. I send EUROEs via IBAN, burned by Monerium, fiat in the account of the garage owner. Oh, but you also have money on chain. Yes. And then I bridge, swap, get my EUROEs, and then I get it into my account. So, effectively, what are we missing then? In order for this to be global, since we have the separation of asset from banking, we gotta go and integrate as many clearinghouses, as many countries, as many plugs we can, so then those that are in custody of funds, either because of stable issuance or maybe a centralized exchange, maybe Binance, maybe a bank, it's not up to us to define who is going to win. In fact, hopefully everybody wins, because that means the entire 8 billion people in the world have an option. It's all about optionalities. So, geographic rollout. I need to make sure in every single country we're plugged. What does that mean? If I'm in Europe, I get an IBAN. If I'm in the UK, I get a sort code and an account. If I'm in Brazil, I get a PIX key. If I am in the US, I got bank, branch, plus account associated with my blockchain address. And if I want to do instant payment, I am connected to the new, faster payment mechanisms. For those that are not aware, one of the highest costs in banking and payment are associated with collateral, because 6 p.m. in a given country, you have the cutting line for the interbanking transactions, and it only reopens next Monday. With all these faster payment initiatives, you can actually do it 24/7, 365 days a year. So by being plugged there, then having local methods like direct debit, SEPA, or Pix, Invoice, Boleto, whereas FedNow, we can basically offer all these stables to be connected and digital assets to be connected to local markets. So you have card schemes, you have licenses, and a bunch of other complexities that will make it extremely challenging to roll out this, but we are in the process of doing already. Right now, we have live 2 countries, and Europe is a country in the eyes of implementation, right? Because it's one regulator that you can passport throughout 29 countries, or 27. Then, the moment we add Brazil, we have 3 countries and 3 routes, which means a Brazilian user can actually pay or transfer funds to the UK. The same for Europe. But the moment you add the 4th country, you now have 6 routes. Because effectively, you can basically transfer balances and funds to all those destinations and exit in all those destinations. What am I saying? Wise, Revolut, Nubank, which is the largest neobank in the world with over 100 million customers, we compressed all their hard work for the past 10 years, and we roll out in the past year. Everything they have been fighting for, all these difficult licenses, banking licenses they have been fighting for, we're able to do it in a much easier way simply because we're not touching funds. Because we decided to separate bankers from banking. I'm in the mission of providing access. I'm not in the mission to make yield on top of people's money. Eventually, those missions can collide, but let the world decide if that's the way to go. So, by basically implementing what I just said, we're saying we're creating banking 3.0 in Europe, in the UK, now Brazil, soon to come US, maybe next country. Effectively, you created the bank rails to anyone out there. So, what happens to bankers? Can they have access to this? Definitely. I'm not here to decide if they should exist or not. Users will decide if they should exist or not. BlackBerry was not chosen when Apple came in. Not up to us. So, if a banker wants to issue our card, they can. And they can turn it on and off money movement via blockchain. So right now, any bank in the globe can get the Gnosis card. As much as right now, any wallet out there can get the Gnosis card. So, but we can't do it all at once, and we need to start somewhere, right? And this is a very important element. We talk about capabilities, and we talk about regulation. There is always a light touch. What is a light touch? Exactly how we started. We needed someone to help us with the license, someone to process the fiat transactions, someone to basically be our godfather in the process from a responsibility point of view. Very expensive setting to start, and we knew it from day one. We got a lot of help from Visa to take off, that was actually extremely important. But effectively, we started. We started with a partner that provided an account number. We started with cards being issued in those 2 places. But then, as we move, we want to go to a more complex capability, getting licenses inside of Gnosis Pay. Why? Because the more you are in front of the regulator, the more you can help with the new world. This is not different than what they have been doing for the past 100 years. The only difference is we can provide more transparent and clear view on how to use this technology rather than the legacy costly technology. So as we move, we can go from simple setting to more sophisticated setting, giving users more capabilities because we're able to understand them, underwrite them, and provide better services that now do not rely on interpretations. Then, as you get more mature, then you move once again, more capabilities. Now you are plugged into the local clearing and settlement houses of different countries. And this keeps going and going and going to the evolution that we can add a lot more countries, a lot faster than anyone ever did it in the history of banking and payments. So, what do we got right now? Last year, we announced we got a card, but it was never a card. It was basically your first current account, checkings account for the Americans, spending account, you name it. And that basically holds the capability of multi-currency. USD, GBP, EUR, you name it. Then we integrated IBANs. You can now pay bills using your IBANs. So let's, IBAN your transactions out. Then I heard very, very important person in Coinbase saying that he never got such a great FX in a transaction when going to the US. We enable that. And we also enable on and off paying a ramp from Gnosis chain as well as chain transfers. And the funny aspect is we have not created additional cost, which was the entire objective. It was to leverage existing Rails cost set by traditional players. But don't you want to eliminate all these transactions and all these costs? I cannot, guys. But consumers can. Only by bringing billion people to this world, they will basically push existing costs that they are not willing to pay anymore. So, maybe first time we're saying this out loud, EA, UK, ready to go, get your cards, experiment. We're coming soon this summer. Brazil, Argentina, Mexico, Colombia, Australia, Singapore, Thailand, Japan, and Indonesia. So we are going fast. I need you to join us to transform the world's financial infrastructure to finally democratize banking worldwide. Thank you. We have some minutes left. I would love to get some questions from the audience. So please shoot.
I'll just ask everyone. Guys, any questions? We have one here.
Hey, great talk.
Julian.
Yeah, it's me. Julian from Safe. So one question, other than interchange fee, how do you intend to make money on the long run?
So there's several aspects on the economics. You start on interchange fee, there's cross-border fees, multi-currency fees, there are FX fees. So all of those fees are basically inside of already the ecosystem, and we can basically tap on rather than charging the user, just taking it back from what is being charged in the process. So let's say there's 4% charge, 3%, 2% charge to the merchant, and the fees varies depending if you're a domestic customer or an international customer. And there's sufficient revenue to be made in that part of the end. Our objective is to be as nothing fee possible to ensure that we get the adoption on the on-chain side. And hopefully, if transactions are moving on-chain, the cost of transaction becomes even exponentially lower to the degree that you can increase profitability, again, by not having to charge fees on the on-chain side.
Thank you.
Thank you.
Any more questions?
Oh, two.
Yeah.
Upstairs.
Thank you very much. Just a quick one. Actually, an awesome presentation. Thank you very much. Yes, my question is like, you mentioned on your slides like easy on and off ramp for Gnosis chain. So I was like interested if you plan to actually enable more chains in the future to address more adoption.
Yes.
Thank you.
You know, that's probably one of the questions I get the most, regardless of where I go. And there's many explanations to this. Number one, like I said, it's not the card. The card itself is extremely easy to go to multiple chains, right? The problem that we are trying to resolve is this multi-connections and rails to many countries out there. And those nuances is not only about the technical integration, but the safety or security mechanism to avoid bridging and to avoid risks of transactions failing. So when you go multi-chain, trying to replicate all of those elements, plus KYC, KYT elements, plus different types of storing elements, it makes it extremely complex. However, we have been, of course, since day one thinking, how are we going to expand to multi-chains? Because definitely that's something that makes sense. So the drawing that we have in mind, and still, of course, not concluded, and again, I welcome you guys to help us fixing this problem, is by basically providing cards in different chains, and then trying to bring from pre-settlement stage onwards back to Gnosis, because that would avoid lots of developments outside this ecosystem, which is, again, the main objective. We need to make a strong ecosystem that can perform to the standard that interoperates among multiple regulators out there. So it's not a trivial answer, and I wish we could just go in every chain and just simply, deploy it. But I think for now, it would be great to have users coming in, growing this with us, and eventually we can actually walk towards multi-chains approach. But again, people have an idea for it, would love to get it, so please ping me on it. Thank you.
Next question.
Thank you, Marcos, for a great talk. For customers in emerging markets like Indonesia or India who can't KYC, how can we onboard them into Gnosis Pay?
That cannot KYC. Now you got me there. What do you mean with cannot KYC?
Like people who don't have an ID, people who don't have a bank account, people who don't have access to most traditional forms of proving their identity.
Okay, now I got you. So the reality is most of the emerging markets that we've been tapping, that we are expanding, they are users that we can onboard. The majority of the users, actually, we can onboard. The offer that we're going to those markets are normally reason why those people are leaving their countries and trying to bring money back. So it's remittance as an angle and payment as another angle, meaning I don't trust my currency or it's too volatile and therefore I would like to hold USD, zeros, or whatever, and then spend at the point of sale with the best conversion or the minimum conversion at the time of the transaction. So I have not experienced sufficient issues on the onboarding. For instance, Indonesia, that's a very specific question. But Brazil, Argentina, Mexico, we've been exploring a lot. Thailand, Singapore, and basically we actually have mechanisms to onboard these guys, and this is what we're going after. I'm certain that in 2024 we're not going to solve the global's problems, but the mechanism should enable us to accelerate forms of validating people and making sure you are eligible to have a card.
We have time for one last question.
Maybe we can do two very quickly. One here, and yeah.
Yeah, I have a question about regulations. What are your mechanisms for crypto assets spending as fiat, because it can be money laundering?
So help me a little bit better with your question. So what do you mean? So
when you have crypto assets, you bridge and then you start spending as fiat. From fiat, it's clear, but what are regulations talking about that?
Okay. It's a very interesting point. Are we spending fiat or are we spending EUROEs? And is EUROEs fiat? So there's a very clear understanding that EUROEs is digital money, not fiat. And therefore, when you're spending with the card, you're spending digital money. I think this will evolve. There is a very difficult gray zone at the moment. And we're happy to be in the gray zone and help to provide clarity. And therefore, we can operate as someone that will not touch funds because it's digital money, and we don't touch the digital money ourselves. So I see this problem evolving over time, and I see that MiCA and other regulators are trying to understand what they're going to do with it. But for now, it's regulated. We're not trespassing. We had the approvals of everyone, and basically you're safe to use the product. We had a final question on the other side. Sorry, yes.
Yeah, I mean, absolutely lovely presentation, and I'm also a user of Gnosis Pay Card, and it's awesome. So to your
You're a great guy.
Sorry?
You're a great guy.
Yes, I am. To your earlier point about removing the challenge about the multi-chain support. So if you did not have to rely on the Gnosis Safe Smart account, but another secure, maybe a hardware wallet or something, wouldn't that be like a big unblocker for making it multi-chain? I mean, of course, there is the faster settlement and stuff involved,
Yeah.
but wouldn't that, is that, I mean, do you have some constraint saying that, okay, it has to be Gnosis Smart account?
Okay, so let me answer in two ways. First of all, I need to make a disclaimer. Stefan is my co-founder, the specialist in the Gnosis, in the chain side. But let me answer from a bit of a history, data that you don't know. We started this project as a joint venture between the previous company that I was part of and Gnosis. And then we basically spin off. What was the first project? A hardware wallet that could pay at the point of sale without having any interaction on chain to make a decision, and basically just informing the decision was made between the hardware product and the point of sale. That was basically, you could have funds in multiple places, multiple chains, and you could basically do it. It is so difficult to scale. First of all, numerous touches in the back of your product, like of your phone, basically, okay, password, tap the phone, okay, do you allow this transaction, tap. So you have so many things you gotta do prior to a transaction. Imagine a Homer Simpson, or imagine a little bit chubby doctor, which is my dad, that has no idea about technology, having grab the phone. I mean, my dad still write the password in the back of the card, so please don't tell anyone. And so it would be impossible. We are talking about 1 billion users. We had to think from that angle backwards. I think the multi-chain, it's not a faraway problem to be resolved. It's just that we need a little bit more maturity. We need more users. We need transactions. Like we have a lot of people that hold their cards today and still have questions about taxes, how difficult it is with the tax part and stuff like that. So there's lots of myths that needs to be removed on the current setting, and hopefully we're getting more and more comfortable with to then scale this product and hopefully then go to the next chains with a way that we're not removing users and transactions from the chain, rather making a settlement where we are relying that connections with the traditional world are in place, everybody's comfortable, and we can then make sure we all move to a new world together. With that, thank you very much for your time. Sorry that was too early, but I'll see you guys out there. Thank you.
That was amazing, Marcos. Thank you.